if anyone picks up on it, Sean.
Yeah.
Hey, Simon. Firstly, how long have we got with you?
Well, I got a meeting at about 11 o'clock. It's not too urgent, but if we end up stopping then, I can make.
Okay, cool. Yeah. So, firstly, obviously, when we teed this up, it was about 2-3 weeks ago. So, obviously, the world's looking a little bit different since then. So, the topics of conversation may have changed slightly, and also Lawrence Grinceri, I've invited him along. He's a friend of mine here in Singapore. Lawrence is with a company called Skyhook Capital. They're active in the blockchain space. Previously, Lawrence has had a company called AG Delta, which has transacted at what is it, Lawrence? About 1.5 trillion through your platform and wealth management. Simon, I think everyone in the crypto space absolutely knows who you are. So maybe if you want to kick it off, really the purpose of what I'm trying to do here is get some content for the Real Crypto series, which is designed for people outside of our space, that I'm really trying to educate them on what really is going on here. So it's a pleasure to have two real heavyweights along today. Simon, okay. You're someone I've admired for a long time, so it's great to speak to you for the first time. So okay. maybe if we
is this live or recorded?
No, it's recorded. It's recorded. Okay. So anything don't worry on that front. Simon, do you want to kick it off and maybe give us your background? Then I'll throw it over to Lawrence to do the same.
Okay. Yeah. Is this recording now?
Yes.
Oh right. Okay. Sorry. Okay. So yeah, we're in the midst of one of the worst weekends in the markets, both crypto traditional markets and health markets, I guess, for coronavirus. So everyone's a bit disorientated, but I think during these times, education is obviously really important. So I want to try and make the effort to be here. For those of you that don't know, my name is Simon Dixon. I'm the CEO and co-founder of BnkToTheFuture.com. We were the world's first securities business in crypto. We started in 2010. Personally, I was part of a community called the Monetary Reform community before I started in the Bitcoin community when Bitcoin was created. And we were looking and geeking out about lots of different topics. I originally came from investment banking. I was a market maker on the London Stock Exchange, and then in corporate finance doing IPOs for early stage companies floating on stock markets. Did a lot of work in economics and then tried to unlearn everything I learned in economics afterwards. So I was, because I was part of the monetary reform community, I was invited to the first Bitcoin conference in the world in 2011, which was held in Prague. And I wrote a book called BnkToTheFuture, which was the first published book in the world that included Bitcoin. We're investing in lots of different companies in the industry. I'm a shareholder in 100 different companies in the industry, from Kraken to Bitfinex to Bitstamp to Coinbase to Ripple Labs, blockchain.com and many others. And we run an online investment platform. So been a part of advocating for Bitcoin from when it was 40 people in a room to where it is today, where it looks like it's going to have an impact in the future of everybody's life as we enter these crisis modes. And I'm just going to stop some of the bleeping.
No problem. Simon, that's one hell of a heavyweight intro.
Okay.
No pressure, Lawrence. Over to you.
It's an extremely heavyweight intro. I'm still impressed with the hotel room Simon has in London. Is that correct, Simon?
No, I'm in Isle of Man.
Isle of Man, very nice. Well, it looks like you're not suffering from too much hardship during the corona situation.
Well, I'd like to keep it that way, yeah.
But my background, I'm sitting in Singapore. Probably can already tell I'm an Australian, however. I started my career at a university with an engineering degree, electronic engineering in the late 1980s. So very much early on in my career, I sort of started when, the world was still pretty much just using mainframes, and there weren't desktops, or there weren't all the sort of technology that we've come to know and love as part of our sort of day-to-day life experience. So I've sort of progressed. Very early on in my career, started working in management consultancy and in the financial services industry. So in the 90s, I moved to Singapore and working for what is now called Accenture, and effectively helping banks understand, how to deal with the advent of online technology. When in the mid 90s, we all started moving on to doing banking through an internet channel. By 97, I'd actually left the management consultancy sphere, and I joined a Palo Alto-based technology company called TIBCO that pretty much had invented the most efficient way to move data around the network in what they call a distributed process environment, how the world looks today. That allowed us to then start, with TIBCO, we built high volume trading platforms for equity trading. So the first generation of, using an equity trading platform was basically part of that experience. TIBCO was, well past the dot-com bubble crash, basically went on and still was a fantastic company. It sold quite recently for about $4 billion. By the early 2000s, after sort of having that experience, I got into my own companies. I started, I think Sean mentioned, a wealth management platform technology called AG Delta. In AG Delta, I pretty much took a lot of my knowledge around architectures and banking and TIBCO's experience, and pretty much built the first platform that is able to allow a financial advisor to manage a portfolio of diverse different types of assets. Structured products, bonds, FX, you name what they want to put, they could all have it under one platform. Up till then, you had a different trading system to basically buy each of the different types of asset classes. And then it was a nightmare getting that data into its consolidated phase to do analysis. So we created basically the first platform that was multi-asset, multi-jurisdiction, multi-market, and that pretty much then proliferated through a lot of the top-tier banks, especially around Asia. That's where we've transacted collectively over $2 trillion through that platform. AG Delta is still operating and running today. I still have a significant interest in it. But I moved in 2017, digital securities, or more specifically digital assets, with the belief that this infrastructure was going to usurp the current legacy environments that we have. And now we've been developing effectively a platform that is going to be what I consider to be a mainstream adopted platform by the very customers I'm serving today, the private banks, the family offices and asset managers. But now start to deliver digital securities to them so that they can manage those investment products side by side with what I call the traditional wrap stuff, off-chain products. So that's me.
Okay, thank you very much, Lawrence. I'll just do a very brief intro on who I am, and then really get into some fascinating subjects today, guys. So obviously my viewers know I've had this media brand for 4 years now. I've been very much a BTC maximalist for 3.5 of those, encouraging everyone to take a position in BTC. My rationale has been that I saw a broken system. It's been a wonderful education economics for me, and I'm sure I'm going to learn some more from you two today. Previous to that, I set up a infrastructure business in London in '96, which was building the backbone of the internet. So, we had 100 odd guys in Cisco technology, Nortel switches. We were providing teams to all the telcos, effectively building the backbone of the internet. I also had a PKI consultancy in the late 90s as well. So, when crypto came along, I certainly had a somewhat of an understanding of where it was at infrastructure-wise. What I didn't have was an understanding of the economics. I came into the space in 2016 purely off the back of some friends making huge gains speculating on in the markets. That's what drew me into it. And, over the course of the year, realized that I absolutely knew nothing at all about economics, even though having, studied it somewhat in university. So that's been the huge blessing for me to be immersed and have the opportunity to talk to some real thought leaders in this space and learn the different schools of economic theory. And I'm just absolutely fascinated by this space. So Simon, in a nutshell, that's me. I really want to hear from you. Thanks once again for joining us here today. Could you maybe kick it off and give us your thoughts on where we're at right now and what role you see BTC, crypto, blockchain playing in our economy and lives moving forward?
Yeah, sure. So, as I said in the intro, I actually got into this space because I was really interested in non-fractional reserve banking and the impact that fractional reserve banking was going to have. So I was really deep diving into the subject and realized that we have no, the concept of fractional reserve banking means that the governments have essentially outsourced the money supply and money creation to the private banking sector. There were essentially three fundamental flaws that I talked about in that 2010 book, Protect Your Future Before Governments Go Bust. And that is that when you deposit your money with the bank actually becomes the legal owner of that money. When the bank becomes the legal owner of that money, they can actually spend it as they choose, or if they give you permission to spend that money that they now own, that you have to get their permission on how you would like to spend it. And the third thing is that because governments have, over time, through financial engineering, created this really obscure system whereby they combined the process of issuing loans with money creation, it means that essentially our economies depend upon banks issuing loans in order to stimulate our economies. And they outsourced and essentially gave private banks the ability to create digital currency. So Bitcoin was by no means the first digital currency. The dollar, the pound, the euro, and all fiat currencies, they are digital currencies. You have different types of money. Those digital currencies are created every time somebody borrows money from a bank. And it creates a ledger on that system. And the economics taught me that there's this thing called a multiplier effect that regulates how much digital currency banks can create when they issue loans. But I started to realize that they call it fractional reserve, whereby the theory is that you have a reserve and then the money multiplies. But I studied it and realized that there was no reserve and there was no fraction. So really it was just an appetite by banks to lend money, which was dictating the flow of all our money. And as laws are going to change over time, it's going to get stricter and stricter in terms of how you can spend your money until eventually you reach a phase where we are today, where the money is not yours, you can't spend it as you choose, and it's inflated away as more and more governments try to use more and more financial engineering in order to stimulate more and more debt. In essentially what I call the world's largest regulated Ponzi scheme in the world, in history that we've ever seen.
Actually, Simon, I think they've also called it another thing, which is modern monetary theory, right? MMT.
Exactly, yeah. And so I spend a lot of time studying those different monetary theories and different schools of economics. And the interesting, most fascinating thing is that none of these economic theories have actually been resolved as fact or truth, yet they are used to dictate the flow of all our money and how we actually respond to situations like today. So in a nutshell, what I wanted to do, my reaction, my wife and myself wanted to create a non-fractional reserve bank it was around about 2008, 2009, we started looking at that. We were essentially, we applied to do that. We were told by the regulators a few things that firstly, you're going to need 60 million in capital reserves. There was no such concept as a challenger bank, which later came. They also said that you're going to need 30 million for the expenditure, and you're going to need branches. It can't be fully technology based. And they also said that you have to retire as CEO and hire somebody that's already created a bank because you can't do it. So at that time we were very disappointed. And they also said to us, and by the way, you do have to leverage and you do have to issue loans. because then you're not a bank if you don't do that. So for us, that was a bit of a disappointing time. But the silver lining was that one of my friends in the monetary reform community changed his Twitter handle to Johnny Bitcoin. And this guy was in a squat in London. He just moved out and moved in with a guy called Amir Taki, and was working on, he sold his house and put everything he owned into this crazy thing called Bitcoin. So he was telling me all about it. And at the time, it seemed like a solution to the problem. So rather than spending 90 million on technology and branches, we went to check out this this thing called Bitcoin. Flew over to Prague, was invited to speak, and then I saw a solution to the problem because it looked like they were building non-fractional reserve banking through technology. And so really, that's where I came to it. As I studied deeper, I realized this is the exact opposite to the problems with banking. You can actually, they've created technology whereby you can own your money without any person in the middle. So the second thing is that you can spend it as you choose, person to person. Obviously, if you do things illegal with that money, then it's subject to confiscation and law. But the fact of the matter is that has to be retrospectively proven, and you can transact as you choose. And thirdly, the most importantly, it was a money supply whose supply was never going to change. So this what we saw as, firstly, I thought it was a solution to how to build non-fractional reserve banks. And then secondly, this whole concept of, as this looked more and more likely to succeed over time, this is actually the world's best shot we've ever seen at achieving sound money. And I don't think that's ever going to come again.
No doubt, Simon. But I mean, I think to probably simplify all of that from my perspective, you know, one of the key attributes of blockchain technology and then applying it in terms of a financial service infrastructure is that effectively you no longer have, as you said earlier, banks being in control of your capital effectively, right? You hold it all in your wallet or your nominated digital custodian that doesn't necessarily need to be a bank. And therefore, you are no longer subject to probably one of the worst business decisions anyone ever makes, and that is to give your cash to a financial institution that will pay you nothing for having it, except potentially layer on more fees for not having enough in the account, and then go off and pretty much put that in loan portfolios and whatever other sort of, you know, heavily risk-weighted investment decisions they make, such as credit cards, where they get paid a 20%, you know, or 24% annualized rate of interest to the people that are basically using their debt facilities, their credit facilities. So, yeah, it's a joke. But I did hear one of your earlier videos from a few days ago, Simon, and I thought it was really interesting as well when you were talking about, you know, effectively this sort of event that's happening right now, and in general in all types of major economic corrections, you will find that ushers in the new thing that basically is there to, shall we say, fix the problems that led to this particular event, be it financial innovation at a product level, but also I think at a technology level as well. And I sort of agree with you. I think now this is going to shake out, that the whole modern monetary theory is going to prove to be what it is, which is, I think, as you correctly put it, a Ponzi scheme based on fiat, and lead us back into creating a new economic model that not only, I think, is going to be more realistically tethered to real assets, you know, underpinning the economy, but also to provide a new mechanism for basically implementing policy into the network so that, you know, we can start to calculate in the costs for economic, other economic activities that are not built into the system, such as environment, such as some sort of biosecurity platform that, you know, the world will obviously now build after this example of a pandemic with the coronavirus. All of that needs to be paid for. So it becomes dependent less about government and more about this sort of global financial services network, which effectively has incorporated a lot of those costs into the economic model.
Interesting. Hey, you know, I think we should definitely let's stay at the macro level. What would you guys say to the average person right now watching this, who is watching their share portfolio take an absolute slapping? We're seeing people run back to cash. There's a lot of people who are talking ill about Bitcoin and crypto in general because the correlation hasn't separated from the traditional markets. Simon, maybe if you go first, could you talk on, especially that last topic, at what point do you see the Bitcoin decoupling from the quite clear tracking it's having with traditional markets at the moment, and what's your strategy around that?
Yeah, so if you look at Bitcoin cycles of adoption, they've always been centered around utility-based use cases or speculative-based use cases. So if you look back, it was originally, you know, used for gambling and drugs and allowed people to buy things that they couldn't buy using traditional money. The problem is with that is that you create an immutable record of everything you do when you transact in Bitcoin. And therefore, once a government agency can attach an identity to your transaction, they have the entire history that they can then use. So it's not a very good currency for crime. So that then evolved into different use cases. So one of the original spikes was when WikiLeaks, a perfectly legitimate service, but because it was the nature of what it does, exposing, you know, government cover-ups and information that's censored, it went through a censorship phase with the banking system, removing all payments to it. So then it started accepting Bitcoin. And therefore, we started to see a use case for how Bitcoin can be used in a legitimate environment or a legal environment to remove censorship. We also saw a pocket of innovation and pockets of adoption when Cyprus went through their crisis and started bailing in people's funds. And then that led people to realize, okay, so it not only helps people with the ability to spend their money as they choose, regardless of politics and censorship, it also allows people to own their money, whereby it is not subject to bail-ins unless you give it to somebody else to look after for you. And then, so you look at, and then we had this rhetoric evolve when we realized digital cash, you know, the volatility of the currency meant that it was not very good for people to use for their day-to-day expenses. Because if you're in debt and you're trying to pay your rent and you've got some Bitcoin, and you know something happens in the market and you can't afford your rent because it's priced in dollars or pounds or Australian dollars, and you got Bitcoin, then it becomes a very hard medium of exchange. And also, as people believe that fixed supply would always drive the price up in the long term, as long as the utility increases, people become less and less inclined to spend it. And so people started hoarding it, and this store of value rhetoric came about. From there, I think the stage that we're at right now is that we went from something that was never going to succeed to something that the whole world found out about. Now, obviously, we had the 2017 disruption in capital markets, where alternative blockchains like Ethereum were used in order to create financial products that people were investing in. And then that created a new use case, which then created a speculative frenzy across the entire markets. But now we're in the stage of what I call Bitcoin is what's called a speculative store of value. It's not a store of value. Gold is a store of value. It's got 5,000 years of history of retaining people's wealth with little bits of volatility in between. But Bitcoin is what's called a speculative store of value, i.e. it's got some properties that are much better than gold in terms of the ability to send it globally and transport it a lot easier. and also the ability to store it in a lot easier way, so that you don't end up giving it to third parties in order to store for you, and therefore you get all the benefits of it. But it's nowhere near a store of value yet. So the vast majority of people have all heard of Bitcoin. We've now reached a world where everywhere I go in the world, every corner, no matter how small it is, no matter how obscure it is, everybody's heard of Bitcoin, but they are not sure what it is. Most of them think it's a Ponzi scheme, a scam, a currency just for drug dealers, or just a really good way of making money. As the world starts to realize, the day that Bitcoin becomes a store of value is the day when people realize that it's not a Ponzi scheme, it's not a scam, it's not a currency just for drug dealers, and it's not just a way of making money, because eventually when people realize that, it can then stop. Once it reaches that phase, it can then fulfill the use case of store of value. But the difference between speculative store of value and becoming store of value has created, because of its fixed money supply, one of the most speculative but risk-adjusted high return opportunities that over the last 10 years has returned 9 million% to those that bought into that rhetoric. And people speculate, as the world realizes that you can't own your money, you can't spend your money, and it's going to be inflated away, that it drives more and more people to realize, oh, this is a way of owning my own money, spending my own money, and having a money supply that can't be inflated away. So these are the where I think we are as an industry. If you are on the breadline and you're in debt, then it's a very tricky thing to get your head around, because most people don't have spare funds to invest in times of uncertainty, especially in a crisis, a health crisis like this, when people are focused on survival. But everybody is in a speculative economy right now. Deciding how you allocate your funds, there's only two choices you have. You either give it to somebody else to speculate for you, and if you leave it in a bank, then you're speculating on the credit risk of that bank. You're speculating on their property and real estate portfolio that they'll be investing into. You're speculating that the governments will continue to pump PQE and give banks access to 0% interest loans so that they can continue to lend money for mortgages. And those are all speculations. If you're speculating on real estate or property, you're speculating that the government is going to keep the Ponzi scheme alive for longer by creating this environment whereby banks are issuing loans so that people can buy mortgages. And so when people buy mortgages, because all 40% of the entire money supply is allocated towards that, then you're speculating on the government continuing that policy and not taking over the money supply. I'm forecasting that the government is going to take over the money supply, if not this year, and they're going to take it away from banks. And I'm thinking that's something that's coming soon. If you're speculating on Bitcoin, you have to be subject to the volatility, but you're buying into the use case. You're buying into the belief that in the future or now, people are going to want to own their own money, spend their own money, and fixed money supply becomes important. One thing you cannot get away from is speculation, because we are in a speculative economy, and the decisions you make is either you educating yourself on where you're going to speculate, or you give it to somebody else to speculate for you. There's no other choice.
Sure, Lawrence, I'll throw it over to you in a moment, but Simon, on that sort of chain of thought, for me personally, I'm flooded with inquiries at the moment. Should I buy Bitcoin? You're the guy that's been making all this Bitcoin content for 4 years. It's tracking the traditional markets down.
That was the original question. I forgot to cover that, didn't I?
Yeah. So, well, look, I'll give you my thoughts on it, then I'll throw it back to you. But for me, answering these people, basically, I'm saying, look, I absolutely see the price of Bitcoin tracking the traditional markets for the foreseeable future, just in a more extreme fashion, as we're clearly seeing. At the same time, I think all markets are absolutely just driven by fear and greed, and the buying opportunity. If you are here speculating then of course it's going to be immense with Bitcoin again. And you know, coming back to the potential sort of decoupling and maybe, you know, what Bitcoin is ultimately all about. I think there's going to have to be that absolute shake-up. And if we see, you know, central banks take a position in this asset class in the near future, and it could happen now. You know, none of us really saw this event coming, this black swan that clearly is going to drive the, you know, a financial crisis maybe a little bit further forward for us. So Simon, if you could, you know, coming back to that, could you maybe comment on what's the timeline you potentially see for Bitcoin decoupling from the traditional markets?
So firstly, we're in an environment today which is an environment we've never seen before. Stock markets are crashing, bond markets are crashing, bond and stocks are correlated. That is that is not normal. Gold's crashing at the same time and Bitcoin's crashing at the same time. So what can you deduce from that? It's a movement away from speculation and fear and over to what they, you know, certainty and cash. So we're in a fear-driven economy right now. When people are fearful for their health, you know, whether they're going to have enough supplies, enough toilet rolls, and enough, you know, food, if just in case everyone needs to move into quarantine as this gets worse, the last thing you're going to be thinking about is speculation. You're going to be driving into cash, making sure that you and your loved ones have enough, and trying to figure out your approach for that. But at some point, the real fundamentals of these markets kick in. So when you look at the stock market, what are the fundamentals behind it? Well, essentially, in 2008, we the world showed that the problems with outsourcing the money supply to the private banking sector is that you create excessive level of consumer, government, corporate debt. So, you know, we have more debt than money, and that has never changed. And so in order to stimulate the economy, you have to have more debt. So when everyone's maxed out on their credit cards and subprime loans, you have to find other forms of pushing the debt to stimulate the economy. So the central bank decided to step in and invest all their money that they created into the corporate bond market, which is essentially increasing business debt. But then they could use that in order to buy back stocks and push that. So what they did with the last decade of bull market in the stock market is essentially you encourage consumer loans. So all of the students were consuming on credit cards and student loans. Most people were living month to month where they were, you know, their rent and their mortgage was superseding much of their income and expenses. So they were increasing their debt levels over that time. And so all of the consumption that was driving stock market growth was based upon loans and credit cards and increased levels of debt. The prices were also supported by central banks issuing currencies, purchasing corporate bonds, were then used to repurchase their stock as they get access to free money, as we're seeing with 0% interest loans now, so that they can pump up and stimulate markets. And then you look at that, then the fact that banks were at the epicenter of being able to create the money, and they're reallocating it to property markets. Yeah. So you've got several, you know, really artificial stimulated markets that have been propped up over the last decade. And so therefore, that is what, you know, you've had this 10-year bull market whereby we've moved from global debt of like 25 trillion to 250 trillion. We just 10x the debt. And that's all we did over the last 10 years. 10 years, 10x the debt. And so therefore, you've had this illusion, essentially, of economic growth and prosperity. And in fact, it works very, very well. Now, the fact that Bitcoin came along at this time and is ticking away as, you know, but at the end of the day, when people are moving to fear, they're going to take all their money out of stocks. And what we're seeing right now is they're also taking their money out of Bitcoin. Couple that with the fact that we've had technological innovation in the crypto markets, whereby people were taking out dollar loans collateralized by their Bitcoin. So then there was lots of margin calls creating crashes without even people wanting to sell because they took out these loans. You have the situation that we're in right now. But what I think that Bitcoin is, my speculation, my belief of what it is it is counter to a financial crisis, not a stock market crash. So governments have, for the first time in history, said we will do whatever it takes not to let the stock market crash. So monetary policy has disappeared. It's gone to no interest rates, quantitative easing, and monetary policy is completely ineffective now, which is what we've seen this weekend. So that's the reaction that we're getting in the stock markets. But eventually that leads to a financial crisis, which exposes the systemic risk of our traditional financial system. And we're going to have rapid financial innovation in order to keep those banks alive and not lead to the complete destruction. In 2008, the world does not realize that if we let the banks go bust, we would have been in a worse situation than the Great Depression of the 1930s, 30s, 40s. The fact of the matter is you cannot let a bank go bust unless you can replace it with something alternative, because when you let a bank go bust, it leads to a contraction of the money supply, and people losing their money, and therefore a deflationary spiral that you can't counteract, and then they will try to print their way out of it, and you've got these deflationary and inflationary cycles fighting each other depending on which can win fast. Deflationary because people default on their debt, money disappears, so they print some more money, and that's why people are finding it very hard and confused in traditional economic models to figure out, are we in deflation, are we in inflation, what's the reality? People can't do it because the models just don't work, because we're just in unprecedented territory with the economics. But if any event that makes the world realize that it is beneficial to own your own money, spend your own money, and have a fixed money supply, are the events that I think lead to decoupling with stock markets, and therefore more and more people realizing that there is a fixed supply. There's only so many Bitcoins in the world. And if I were a small government, then I would be allocating a portion of my electricity to mining Bitcoin, if nothing else, of a hedge to become more significant if this bet actually works out.
Yeah, I couldn't agree more, Simon. I couldn't agree more. Yeah, I've been talking about that for a couple of years. So, Lawrence, do you want to jump in?
Yeah, let me come and rain on everyone's parade, shall I?
Fantastic.
Look, no doubt, no doubt we're going into a cycle where, effectively, mainly due to what happened again in 2008, we've got a situation where the banks are still, it's going to be quite obvious, as Simon's pointed out, they're imperative to the system, right? All our money's held by them. If they go down, everyone's screwed. The reality is you can take out that whole systemic risk by merely just allowing for a digital assets infrastructure where you own your assets in your wallet. You do not need a bank to custodize any of that for you, right? They can be based on a immutable ledger that's being held either within your own custody or with a digital custodian that you nominate. Either way, the bank's not part of it. The person that's custodizing your money is not basically using it for leverage in other areas and could potentially lose it. My issue with and I believe that system's going to come in place. I mean, as I said to you, I've been working in the financial infrastructure space for decades, and I've seen it, pretty much from the mainframe onwards, happen in real time. The reality is, the issue that you're going to face with Bitcoin is there's not enough of an asset base there to reboot anything. I mean, at the end of the day, I haven't looked at the latest coin cap, but probably it's always been around 100 billion to 150 billion. It's not enough. So unless you're going to find the value of Bitcoin all of a sudden goes through the absolute roof to create an asset value there that could then underpin the reboot of the economy and the digital economy infrastructure, I just don't see that happening. I think the other problem that central banks have is the current holders of wealth in the Bitcoin network. It's very, very muddy. There's been a lot of secretive sort of stuff moved around. I don't think they're going to buy into allowing, they want to start the clean shake. right? They've been spending years basically doing anti-money laundering in the KYC process so that they can understand who owns what around the world. I really doubt if they're going to reboot a Bitcoin where there's a whole bunch of holders that no one really knows from the get-go. I do agree that central banks will move to a digital based sovereign currency on the blockchain. I think the governance that can be supported within the blockchain, automated literally, is going to be a huge saving in terms of efficiency on the global financial services marketplace. Wallets as well as products will be literally tagged with certification of jurisdiction of where they can be or cannot be transacted. And your wallet will determine where you have been KYC'd and are viable to trade in a certain jurisdiction. After that, you can trade with any other wallet you want with that jurisdiction and products that are permitted in that jurisdiction. Peer-to-peer, that's where it's all heading. But I think what will likely happen is I can see more, you need a bigger asset base to sort of tag to the digital token. And I think we could be heading back to sort of a futuristic version of the gold standard where, there's $6 trillion of gold in the system, just to give a perspective of what asset base is there compared to what you have in Bitcoin today. So with $6 trillion, you can boot up the economy. I think when I last looked, the whole value of the thing was about 250 trillion. So, six trillions a big enough amount to form a capital base to build upon. So I see digital gold basically getting very popular. I think you will find that when sovereign nations start to generate their own digital currency, the ability to cross over from one currency to another to do a payment anywhere in the world, or maybe work through a proxy like a digital gold token, it pretty much achieves the same thing that Bitcoin does in terms of security and in terms of ease of payment, in terms of multi-jurisdiction payment. But I don't sort of sit back and view the equality that Bitcoin must be successful for the digital assets infrastructure to become part of the next generation of our financial services networks.
That's fascinating. Could you, Simon, have you got a comment on that? And then I've got a couple of other questions on BTC for you.
Yeah, so I don't see it as either or, and I don't think you need Bitcoin to succeed for that to happen. I think that the sequence of events that are going to come next is that the central banks are going to take back the money supply, and they're going to allow banks to go bust, and they're going to do that through a blockchain-based central bank digital currency. I talked about this about 5 years ago, and the book that I wrote 10 years ago was talking about how you need to replace the debt-based money supply with a debt-free money supply in a way that is non-inflationary and non-deflationary. And so at the time, there was no such thing. I invested in Bitfinex, which created the stable coin, which I think is the foundation of what will later be used by central banks in order to issue these central bank digital currencies. There's no doubt about it that all of the central banks around the world have been looking at how they're going to issue their digital currency. And the way that I see this playing out is that you've got a couple of models that you can have a proactive model or a crisis model. One crisis model might be that a crisis like we have today, a health crisis, exposes the weaknesses of the financial system if people start to default on their debt because they're actually more interested in purchasing essential goods rather than servicing their debt. That leads to the contraction of the money supply in a deflationary environment. And then in order to make up for the fact that money is being destroyed, I think a central bank can come along and say, well, let's let Chase go bust. They've over-leveraged their loan book, but we don't want consumers to lose their money. Our deposit insurance scheme is a Ponzi scheme as well. We haven't got enough money to facilitate people not losing their money, and that leading a spiral. So why don't we just issue our own central bank digital currency where the money supply is equal to the level of debt that actually disappeared from those persons defaulting on their debt? So let's say a bank goes bust, you have $10,000 with Chase Bank. Well, if you can prove that you had $10,000 with Chase Bank, you can download the wallet that was created by the central bank, and that $10,000 will be there as a ledger, which essentially replaces debt-based money with debt-free money, and the currency is issued directly by the central bank. They can then open up their API keys, and financial technology companies all around the world can create innovation on top of these API keys, because they don't necessarily want to be in the retail banking customer service business. They can leave that for financial technology companies. This creates a different fiat currency. It removes the Ponzi scheme of outsourcing the digital currency to the banks and backing it by debt, and replaces it with debt-free currency. I have no doubt that that's going to exist, and everyone's built infrastructure. That's coming, that's inevitable, that's predictable, that's guaranteed. The challenge that I have is that money is going to be very good for certain things, but horrific for other things. So, for example, when I traveled to China, you know, I haven't obviously been there recently, respect to the people that are in quarantine at the moment and the situation they're going through. But last time I went, you know, a stable coin was the currency that people were using for me to transact. I was using WeChat Pay, which is a financial technology company, for paying taxi. There were, in bull markets, people are more willing to accept Bitcoin, but in uncertain markets, they were taking Tether. And the reason for that is because they, you know, obviously when you're pricing something in dollars, you want to spend in dollars and know that you have the certainty that you can complete the transaction without the volatility of the market. Stable coins and central bank digital currencies will be excellent for that. Yeah. The problem will be is that it's going to be the force and effect that it has on privacy and personal sovereignty. When I have a currency that is fully digital issued by the central bank, and I go and travel to China and do a deal with somebody, let's say I was doing a deal with somebody in America, we transacted in the States, and I'm a taxpayer in a different jurisdiction, and there are going to be 3 different central banks that are all going to have access to that blockchain analytics. They're going to automate tax collection. And as we're moving to a more global environment where everyone's working globally and from home, especially during crisis like this, and all the businesses adjust to everyone working from home globally and transacting digitally, they're going to automate tax collection, and 3 governments are going to try and take the tax out of that transaction. It's going to be held in escrow, or it's going to be just taken by 3 governments that all think they're entitled to it. And when I turn at the border to try and go home, my passport will be switched off until those governments that are arguing over whose tax it is has actually collected it on the artificial intelligent robots that they set up. And it's when you have user cases like that that you're going to start saying, well, I need to hold part of my money in something where I can transact regularly. And it's going to be a lot easier to go from currency to currency to currency. Yeah. And then I'm going to look at my savings. Well, my savings, you know, over the last 10 years, my savings have gone up 9 million% because of this fixed money supply asset. I'm probably going to put another, you know, put some more over there for the next 10 years. And then eventually the governments, the small central banks that have bet on this, that have made investment, you know, that have decided to do this, they'll, I believe, eventually add Bitcoin as one of their reserve asset classes. And then you have a game theoretical scenario where the announcement of one small central bank leads to another small central bank having to play catch up. And then the last one, so that, you know, it's like a game of chicken. And the last ones will be the ones that are trying to hold on to all of the power of being one of the most important central bank digital currencies in the world. So I don't see it as either or. I see choice. I see Bitfinex competing with Facebook, competing with the Federal Reserve, competing with a bank in China that issued their own digital dollar, competing with Bitcoin and other things. So it's all about choice and allocation of what currencies perform which function, and a ginormous global currency war as governments all around the world fight for power and to counteract the fact of this, how they collect tax in today's global world.
Yeah, Simon, you're absolutely one of the most knowledgeable guys in the space. I saw a fascinating video you did back in 2011 where you were talking about the Facebook tokens, Twit coin or something or other from Twitter at the time. Question: I see some real division within BTC at the moment around this issue of coin mixing and effectively fungibility. What are your thoughts on that? To me, there seems to be the people within the space that would love to see, the word tainted, a tainted Bitcoin. In other words, all Bitcoins have been through the coin join through mixes. Obviously, we've seen BlockFi recently flag deposits to their scheme, saying we're not going to accept coins. I better be careful what I say here, but certainly it appeared like there's an issue with depositing coins that maybe have been flagged as being used in certain activities or mixed to the point. Do you see an issue here within this community?
Yeah, sure. So when, like, for example, I purchased my house using Bitcoin, and it took the bank 9 months of source of funds, source of wealth. I had to go back to analytics from when the Bitcoin was actually mined to prove that it didn't go through any illicit activities or dark markets. And I had to find, literally, they had to hire a forensic investigator that understood Bitcoin chain analysis just for me to put together a report that allowed me to buy the house. Obviously, Tether was very useful in that time because you can move the Bitcoin to Tether, you can hold the value while the bank does their 9 months of chain analysis in order to spend it as fiat. Really, though, if in that 9 months that this was going nowhere, it would have been so much easier if the seller of the house could have accepted Bitcoin, but it's just the way that it actually worked out. So there will be, if you introduce these privacies and coin join innovations, you essentially create a two-tiered market. There is a premium that people will pay right now for virgin Bitcoins that are mined, so that institutions can add those to their funds, knowing that it hasn't been through any dark market and they'll come straight from the miner. And so the reason for that is because the downside of all of this blockchain analysis is that, there's an upside and a downside. Once financial institutions become more comfortable with this, you can prove that the money is clean by their definition of clean and whatever the law says is clean at that time. And you will have coins that essentially have been through a coin join, have the full privacy settings, but there'll be certain types of institutions that just won't be able to transact with those types of coins. So you will see more sanctioning of wallet addresses. And obviously CoinJoin is a solution and mixing is a solution for that. But what will end up happening is certain coins will be spendable in certain ways if you didn't go through that type of process. And then others will be, spendable by different people. So essentially you create like a two-tiered economy within the Bitcoin environment, and certain merchants and certain people that are willing to accept such coins and not accept such coins.
Okay, that's fascinating. On that topic, I remember watching a video you did with the Dollar Vigilante. I believe you were in China at the time. The Chinese had banned the exchanges. You were there to actually give a talk on Bitcoin forks, from memory. I obviously launched this brand around the same time, Hard Forking. What are your thoughts on the Bitcoin forks?
So my personal perspective is that the scaling debate was a really hard time. The fun days in Bitcoin were when it was us versus the banks. That was my favorite time in crypto. It was this crazy experiment by a bunch of people that were never going to succeed, that everyone thought were loonies, that were telling people that there's this new way of doing things. And by the way, we think it's okay for you to own your own money, spend your money as you choose, and have a money that doesn't get inflated away by excessive printing. And we're called loonies because we now live in a world where we think that it's acceptable that we need to ask our bank and beg our bank for permission to spend our money and we're lucky if we have access to such money. Now, I know this doesn't really affect you if you're, living paycheck to paycheck and credit card to credit card. But if you've built up some wealth in the fiat banking system, you'll understand what it's like when you have to beg your bank to try and access your money, and the sense of relief you get when they actually allow you to transact, because you've given them enough documentation that allows them to grow comfortable with you transacting. It's not a very nice feeling. So with the hard forks, it was a very dark time in Bitcoin's history, but also a very innovative time in history, because essentially there were different schools of thoughts about how to scale Bitcoin. We went from us versus the banks to us versus each other, and the banks laughing and winning, and essentially saying blockchain is good, Bitcoin is bad, because we were infighting, and they were trying to take away the word Bitcoin and call it blockchain so that they could sell it and create it as a bank's innovation. Unfortunately, that led to lots of people buying Bitcoin. I went around the world. I'm doing Blythe Masters work, because Blythe Masters went to every fund manager in the world and told them Bitcoin is bad, blockchain is good. And afterwards, I was fortunate enough to be invited to present to all those people one by one all around the world and let them know that Bitcoin actually is something important. I think we haven't had much innovation in blockchain since. We've had a lot of innovation in Bitcoin and other financial assets. But anyway, the hard forks were the best solution, I think, to splitting the community so that we can have more competition around different use cases. So when we were all arguing about whether Bitcoin's a store of value and should be optimized for savings versus whether Bitcoin is digital cash and should be optimized for spending, everybody was right. And whether Bitcoin was going to be more centralized as a result of having bigger or smaller blocks and all these transaction fees arguments, they were really good points by all parties. I try to remain open-minded to both different arguments, because I believe that no one really knows the answers of how this should be. We just got different theories. And then now with hard forks, you have the opportunity for different blockchains to optimize for different use cases. But if I'm completely honest, I believe that Bitcoin BTC is far too important to give up on, because I believe it's the only one and the world's best shot we have at achieving sound money. And we can experiment in different chains and optimize for the cash use case, optimize for different use cases. But the fact that they, are centralized around certain characters that are required in order to promote them, and when the price crashes, they will go to that character rather than Satoshi Nakamoto, and the whole immaculate conception, that this was created at the time. When we were discussing in that first Bitcoin conference, nobody was talking about making money. We were all talking about alternative ways of transacting. We were all talking about alternative financial systems. We were all broke. The developers weren't making any money. When it turned into making money, obviously that changed a lot of the rhetoric. And it's great because it's created in tremendous wealth from some very interesting people that come from different philosophies in the world. But yeah, the hard fork is, I like the fact that there's a way of taking that school of thought and going off to an alternative chain. I also like the thought that we realize actually these alternatives keep Bitcoin more honest as well, because when there's competition and people exposing the different currencies for different things, it drives people to innovate faster, make things better. More competition is always good, but I do not believe that there is any competition for what might become our world's best shot at achieving sound money, which in my perspective is BTC.
So Simon, on that front, I'd love to sort of stay on this topic for a minute. Obviously having a brand called Hard Forking, I've been immersed in the space. I've had the opportunity to get to talk with Roger, Craig Wright, the key players involved. Actually, Lawrence came up to a BSV conference in Seoul with us last year to check out what they were doing. Is it I'd like to really understand your rationale behind that. Is it because of that network effect? Is it because most of the world sort of understands Bitcoin as being BTC right now? You know, for me, I think they've kind of evolved into quite different things. You know, and BCH, you know, obviously with Roger having a very large influence there, it's got a very sort of libertarian stance to it. You know, they're building in sort of anonymity features, you know, along with, you know, the smart contract functionality, etc. It's doing quite different things to what BTC is doing. And then if you look at BSV, same again. I mean, they've, you know, that whole debate around scaling it, you know, I just absolutely lived and breathed it for you know, or still do. They're now saying, okay, we have this chain that scales. It's, you know, everything is going to happen on chain. It's, you know, it's a fascinating science experiment. Why do you feel that the, you know, BTC is Bitcoin and that's what the rest of the world should know as Bitcoin? Can you just talk a little bit more about that for us?
Yeah, so it's the fact that the rest of the world do know it as Bitcoin. So outside of this world as hard forking, everyone knows what Bitcoin is. Bitcoin is Bitcoin. And everyone knows when you go and buy some Bitcoin, you're buying BTC. There are a small niche community that believe that, no, you're not buying BTC. You're actually buying BCH, or you're buying BSV, or you're buying Bitcoin Gold, or you're buying whatever. These are niche communities. But the vast majority of the world know Bitcoin as Bitcoin. It's a network effect, and it was founded at a time when it wasn't about the money, and that really, it's that fact that it doesn't have a founder that everyone knows about, and even if they do right now, that becomes irrelevant at this stage. The fact that it was created at a time when nobody really was in it for the money, and the fact that all these other chains, there's always questions around, you know, I remember, like, you know, Bitcoin Cash, if I remember it correctly, the history always changes. It was created as a blog from Bitmain where they were threatening the developers and saying, we're going to create our own version of, or we're going to create our own hard fork. So it's Bitmain's, and Bitmain is Satoshi Nakamoto. Then later, Roger Ver, you know, kind of when that didn't actually happen, he obviously decided that I think that there is no future in BTC, so therefore I'm pushing BCH. But it's these characters that are the essential parts of the ecosystem that makes it a thing that people are always going to be skeptical about. That, okay, so that means Bitmain becomes the next Federal Reserve. Or Craig Wright and what's the other guy called? Calvin Ayre, you know, become trillionaires, and they already, you know, Craig Wright has already shown that he has a complete willingness to flex his muscle and say, I'll reorg a chain, I'll fuck up your thing in order to help my thing. You know, and these types of things just means you create a new powerhouse, a new Federal Reserve, a new wealth divide that is essentially ran by these characters, and just doesn't really feel like anything that might become politically neutral, you know, form of sound money that really can be, you know, have an impact in the global world. I could be wrong.
Simon, you know, to me, this has been a frustrating thing. You know, I have effectively, you know, I have a digital record of promoting Bitcoin. You know, I'm quite proud of that. I've taken no money from any ICOs. You know, I think I have a pretty good standing in the community because of what I've done up until now. You know, you're a fascinating character. You've built a huge business here. I'd like to understand, you know, sort of the other companies that you think are really doing something in the space. But just coming back to what we're discussing here, what's frustrated me and with regards to Bitcoin is the attitude of a lot of people that Bitcoin hasn't needed any marketing. You know, I've had zero support financially from anybody in Bitcoin, because the attitude certainly has been, well, no, Bitcoin doesn't need that marketing. I couldn't disagree more. I think it would be miles ahead, and especially coming into a scenario like this, where we've got this potential financial calamity on our hands to be taken seriously. Okay, we had Barry Silbert from Grayscale putting out some ads about Bitcoin being better than gold, I don't know, a year or so ago. But here I am spending more of my own personal money making a show about what's happening in this space, and there is that real frustration for me. So when you're talking about Bitcoin being what the world will know because of that network effect, I mean, for God's sake, we've had Trace Mayer, who talks at length about this sort of thing, handing out flyers for this Mimblewimble coin at Tone Vays' Unconfiscatable conference recently. Where are we at with BTC? To me, I would have thought it would, obviously we've had these forks. We've had, there are a lot of competition from Ethereum. I actually think that fork, that original fork BCH happened because Ethereum was edging up on Bitcoin as potentially something that your average person would know and use in place of Bitcoin. So do we have a problem on our hands effectively that does require a coordinated marketing effort? Okay, it's the tragedy of the commons. You can spend your money promoting Bitcoin, but what do you get in return? There's no door to knock on. There's no one to pay you for those sort of efforts. What are your thoughts around that? I know I probably posed 18 different questions there. But
all right, well, I'll give it a go.
I couldn't understand any of them.
I think Simon might.
All right, well, okay. So firstly, I admire Roger Ver. I'm a very loyal person, and so in my natural state of being, I'm so grateful for Bitcoin for all it has done for me, my family, my loved ones, given me for the last 10 years just this hope that this amazing alternative financial system can be built around this technology. Changed my personal life, changed everything, and I will always be loyal to that. I'll also always give credit to the fact that Bitcoin wouldn't be here if it wasn't for Roger Ver. He was the buyer of last resort in the early days. He was the one that was investing in all the companies. He was the one going around all the different merchants and telling people that they should be accepting Bitcoin. And for me, that deserves, the respect. I still consider Roger Ver a friend, and I respect what he does and what Bitcoin. And one of the things I admire about Bitcoin Cash is their focus on merchant adoption. And Bitcoin communities ridicule of their focus on merchant adoption. I love, I went out to different conferences and made sure that I'm, you get complacent. I want to make sure that we can learn from what's happening in Bitcoin.
Simon, just look on that exact note. I mean, this is my frustration with Bitcoin. When I got it, I spent my Bitcoin with my friends in 2016, 2017. We had an ecosystem. Obviously, the price fluctuating wildly didn't really matter if we were spending money and spending our Bitcoin in each other's businesses. Now I've got involved. I've actually got a sponsor for the series I'm about to produce. It's a Bitcoin debit card from Embley Card, and I think your company also does the same thing. So we are sort of tapping into the traditional finance world there to actually use our Bitcoin, aren't we? Are we as far forward as you think? Are we? How's it tracked? What is your thoughts on sort of that type of solution?
So the challenge with crypto as a medium of exchange and units of account is that everyone's pricing things in fiat currencies, and when you try to buy something in a cryptocurrency, you can't. It's really painful. Look, I love, I'm an ultra long term, bullish on the market, bullish on Bitcoin as sound money. But it's really painful when it comes to actually spending it, and you find yourself in a scenario where someone's pricing something in dollars and you become a trader. And I hate trading. I'm an investor. I used to do trading on the market. 90% of people lose money at the 10% of insiders. That's just the reality as a market maker. I know that firsthand. But when you have to become a speculative trader in order to spend that money, the user experience of it is not pleasant at all. It can be when it works in your favor, but it's horrific when it works against you. So the problem of why Bitcoin is not used as cash, I don't think has got too much to do with transaction fees and these types of things. It's actually all to do with volatility and the fact that people are pricing things in fiat currencies, and then you have to buy it with cryptocurrency. Because the world just doesn't really work that way. Now, if you're rich and you're wealthy, then you can afford to sustain that. But if you're not, then it can be, it can have disastrous effects on your day-to-day management of your life. That's why central bank digital currencies and stable coins and all sorts of stuff become important. So when relate that to promoting digital cash, I love the focus that Bitcoin Cash has on promoting merchant adoption for Bitcoin Cash. And if companies can use it, great. They'll probably end up using Bitcoin Cash and then using Bitcoin and then every other cryptocurrency, or the main ones that people actually spend. So, that's great. But the reality is that you have to reach the stage until you can use it as a full-blown medium of exchange and unit of account. You have to take out some of that. If it's priced in one currency and you're spending in another, and then that has massive fluctuations, then you can't get the adoption that you need as cash, as spending money for those reasons. So I think that those are later effects. Once the world knows that once Bitcoin becomes a store of value rather than a speculative store of value, I think you can have a more normalized unit of account and medium of exchange. But while the world doesn't know what Bitcoin is, you're going to have massive price fluctuations. And while people are not willing to accept Bitcoin or en masse for everything that you spend, then you're always going to struggle with that use case. So, we're learning over time. And
you guys have a debit card as well, don't you? One of your businesses has one of these debit cards, crypto debit cards?
No, I mean, so BnkToTheFuture is an investor in all companies in the ecosystem.
Yeah.
We tend to stay neutral. We allow people to invest in equity in companies in this industry. We've invested in companies like Wirex. We were the seed round.
Yeah, I know that.
We invested in BitPay. We invested in Coinbase. They all have debit cards. We're an investment platform. Think of us more like a crypto securities business rather than an actual retail.
Maybe that's where we can sort of wrap it up and sort of tie this back to you, Lawrence, as well, and your experience in FinTech. Simon, a big part of what I'm trying to do in the Real Crypto series is educate people on Bitcoin, where it came from, where we're at right now, but also really sort of uncover those gems in the crypto and the FinTech space. So if you guys could maybe have a bit of a chat about how you see, what is happening out there, and for you guys, where would a shrewd investor, where should they be looking? And Simon, if you could tell us a bit about how BnkToTheFuture works and how people can use your platform.
Shall I go first? Or do you want to go first?
Maybe we'll let Lawrence jump in first, but you've been sitting quietly there.
When it comes to where to speculate, where to put money in, etc., I look at things more at what they like to refer to a thematic sort of investment approach. So rather than talk about any specific, company, etc., I sort of look for what are the trends, what's going to be happening in the industry. And I definitely think that there's a significant amount of disruption that will happen throughout the financial services sector. I think companies that it's really green shoots at the moment, but there are companies doing some very interesting things when it comes to providing compliance tagged digital assets and wallets. I think Simon mentioned that a bit earlier on. The ability to be able to control exactly what products can go into what wallets is going to automate a lot of. I've built compliancy systems. The one that we have in our wealth management platform, literally gets down to the point of being able to configure what investment product a particular advisor is able to talk to a particular client about, right? So you get into a whole range of different areas of both compliance dealing from central banks to internal policies to not missell or misrepresent products, and then of course the compliance to support the ultimate investment goals that your client has conveyed to you is their objective. You know, are they a conservative investor or a mid-level investor, etc., with regards to their risk profile. So not everything can be automated, but certainly I think the blockchain is got a lot of capacity to automate a lot of the regulatory compliance requirements. So I'd be looking for companies that have a good position there. You know, there could be custodial platforms that have a regulatory approval in a specific jurisdiction that means something. And I don't mean, you know, Cyprus, I'm talking Switzerland or Singapore, you know, a major wealth management center where a lot of money will eventually flow through. There's going to be benefits when, you know, integrating into traditional legacy distribution platforms. You know, a lot of the market right now, traders are accessing effectively money which is digitally represented. It's a trading screen. It may be reflecting fiat in an account, but linking those systems into a digital assets, a back-end infrastructure, I don't think is insurmountable at all. In some cases, quite straightforward. You know, I don't necessarily, my view is if the only thing Bitcoin did was to show the world what's possible in terms of being able to have a completely distributed financial services network where you can implement a certain amount of policy, that would be enough. I mean, if it fades away or whatever happens to it, frankly, just achieving that is a big deal. It's like, to me, when Steve Jobs got dragged down to the Xerox company because someone wanted to show him what a Windows-based interface looked like, right? That was developed by Xerox. It was not developed by Apple. Jobs saw it and thought, wow, we're going to put this on our operating system. So there are certain things that happen in technology that give people an epiphany, and away we go. And Bitcoin may have been just that, and that's enough. I think the digital assets infrastructure is going to develop in the same way that cloud computing did. You'll start off with a lot of private cloud networks, and then eventually people got comfortable with the idea, banks being, when I mean people, sorry, comfortable with the idea that their data is going to share the same CPU and potentially hardware disk that another bank has, right? Using this public data center. So I tend to see that we will, you know, Corda, R3 connected into 100 banks has a huge advantage. I think that's a great platform for connectivity in the settlement space. Ethereum's done a fantastic job in creating a protocol that can support a lot of the compliance requirements in pretty much all jurisdictions. I could see their wallets and products being issued on an Ethereum platform has been quite popular. But whether they're actually transmitted over the Ethereum network between counterparties is another matter, because that network's choked. But hey, you can do that over a private cloud network without any issue, and be in much more control of the fees that you charge. So I see a best of breed approach happening. And I think it's going to be a collection of companies that put this structure together and integrates into the existing financial services infrastructure, which is largely, you know, from a buy-side perspective, front office trading platforms, doing analytics, trying to figure out how to provide a compliant method to manage a client's portfolio and be able to work within the risk requirements of that individual investor. In some, as Simon pointed out earlier, when you've got a lot of assets, the bank can be a complete pain, right? In the new world, when you've got a lot of assets, you've got mobility of those assets is what's going to be key. If we can basically come up with a more sophisticated financial services infrastructure, which the blockchain will be able to deliver, effectively what it's going to mean is we can mobilize assets faster. We combine that with AI, we get to understand where that liquidity is going to be most valuable in terms of further stimulating economic growth. You know, which small, medium enterprises should get better factoring deals because the history of their audits, which are all on the blockchain, shows that, you know, they're a reliable company, they have good cash flow projections going forward. that sort of stuff. So you can quickly figure out where is the money needed to help businesses grow. That stimulates economic activity. There's a lot of things that we're going to need to, I suppose, improve, as we always have, as we go through different versions of infrastructure. And in some respects, we're coming to a big transition stage since, in my opinion, since we started to downsize off the mainframe in the late 80s onto what is effectively what we have today, which is a distributed processing network capability. We're now heading to the next big thing. The internet was a part of that. It wasn't all of it. It was sort of the end point. That started much earlier. Now we're heading to literally a whole new world with regards to what we can achieve in terms of efficiencies and just sheer economic power by basically incorporating a lot of the new technology into an infrastructure that's going to allow us to move money more freely, eliminate all systemic risks in the system, no longer make banks, basically decentralize it, no longer make any particular counterparty, the card that you knock out and the whole thing comes down. There's going to be a lot of opportunities to invest in great companies that are participating in that growth coming in the future.
Okay, Simon. I know we've already run 15 minutes over time. How are you looking?
Yeah, I was on my phone. I was just trying to move an appointment, so I wasn't being rude. But I'm going to have to. This will have to be the closing remarks, I think.
Okay, cool.
So yeah,
I'll leave the closing remarks to you, sir. If you could maybe just wrap it up with some thoughts for people that are obviously a little bit worried about what they're seeing out there right now, both in the traditional markets and the crypto markets, and maybe just talk directly to them right now about what you think they might want to contemplate here.
Sure. Okay. Well, I'll cover a comment on the previous comments, and then I'll say a bit about investing, and then wrap up with what to think about in these current environments. So, I believe that blockchain technology will be used by banks and financial institutions to do things interestingly. The thought that a blockchain is a very inefficient, very expensive, clunky technology. And so if you're using centralization, then you might as well use a centralized database. It's a lot cheaper, it's a lot faster, it's a lot better. So I don't think that's the key innovation that blockchain brought to the world. It's censorship resistance, it's unconfiscatability, and it's auditability upon the printability of that blockchain, and whether you can create more. I think those are the key innovations that come from that. And if I'm completely wrong, and I may be completely wrong, but if all Bitcoin did was create a technology that allowed banks to commit crime faster and cheaper based upon a Ponzi scheme that's harmful to the world, then it would be an extremely depressing place to live in. What I'm interested in is giving choice to people to be able to exit the traditional financial system, should they choose. And by having a force of exit and competition to the traditional financial system and traditional fiat currencies, you make those traditional financial institutions more honest, better, more competitive, and including fiat currencies. Fiat currencies have to get better, more competitive, when people have the choice of having some of the non-volatile asset, that they can spend in cash, but then they have the choice of exiting to Facebook currency, or they have the choice of exiting to Bitcoin. Then they have to do a better job when they do things that are very harmful to their customers or their clients. So I think Bitcoin regulates the regulator. It creates more efficient markets, and you have to have the choice. If you take away the choice, then you will just end up with, as I said, blockchain technology allowing banks to commit crime faster and cheaper using new technology and new toys based upon a Ponzi scheme that is inevitably, predictably, and guaranteed going to cause a lot of harm to a lot of people eventually. So in terms of investing in the industry, we created BnkToTheFuture.com because I wanted to invest in the industry, and I didn't know how, and I didn't know which companies would succeed. So we created a platform which was compliant with global securities laws, whereby if you're from the US, you go via our US broker-dealer online. If you're from the UK, you go via our FCA authorized and regulated company online. If you're from another jurisdiction, you go through one of our securities business, and we automated the whole process of compliance with securities laws from 2010. We did it all in a centralized way. So we're interested in how that can be done in a decentralized way, using decentralized yet compliant technology, using security tokens. Really interested in, topical right now because they're imploding, but DeFi solutions and what we can learn from these mass margin calls and the breakdown of those technologies like we're seeing in the market right now that's testing them. So centralized finance that can use these solutions, decentralized finance, having options with Bitcoin and public blockchains that compete with some of these other more, and then you can also use decentralized finance solutions. So when we created BnkToTheFuture, we wanted to invest in the equity of everything. We didn't know which companies would succeed. So we created a platform where you could diversify very widely and invest $1,000 in 50 different companies for $50,000 or something, provided you're compliant with securities laws in your jurisdiction. In terms of final thoughts, I think right now we're going through, unfortunately, I would hate for Bitcoin to succeed by the traditional financial system, meaning that everybody loses their savings. So it would be extremely selfish to wish the demise of the traditional financial system so that you, as one of the few people that own Bitcoin, can become wealthy. And if that did happen, the destruction of wealth would lead to lots of people pulling out of speculative assets like Bitcoin as well. So like it or not, we're in a two-tiered system, and we need to improve both of those. So I believe that right now, people need to be hedged. I think that you need to explore how you can get involved in the alternative at the same time as maybe not being depending on your level of your financial situation and your age, whether you can afford to take more speculation or not. These are all considerations that I can't figure out for you, that you need to figure out yourself. Younger people can obviously, one of the interesting things that came from ICOs was, although, lots of scams, lots of problems, rampant speculation, bubbles. But for the first time in human history, not human history, for the first time in recent history, the young people that were never going to buy stocks, never going to buy bonds, were never going to get into gold markets, couldn't get a mortgage to get into real estate and property. For the very first time, they started thinking about savings and investing because they were debating which is their favorite cryptocurrency. And so while that may not have worked out, or some people may have created tremendous wealth from it, at least these young people were thinking about savings and investing when before they weren't going to touch any of those markets, and they were the generation that were never going to get in, never going to be able to own their own house or property. And so I think that it's a very interesting time that people get to decide which financial system they want to bet on. And the way that you bet and speculate is going to determine what I believe to be one of the largest wealth redistributions that we've seen in humankind. But I also believe that the traditional financial system, the destruction of the banking system is such a catastrophic event for all, that we need to learn what we can learn to fix those systems, because we do need to operate in a two-tiered world. The regulated, the unregulated. The unregulated keeps the regulated more honest. Without the unregulated, the regulated tend to, merge on crony capitalism. The fiat, the non-fiat, you need to have the two to keep the systems more honest, and choice, more importantly. If this brings more choice to more people, then I think we're alive at the most exciting time in financial history. And although you might be feeling a lot of fear right now, a lot of uncertainty, isn't it amazing that we're alive at a time when we get to see so many different things, so many, and unfortunately, you're going to have to either speculate yourself or have someone speculate for you. But just take care of yourself, take care of your loved ones, hedge yourself, diversify the lessons from the traditional financial system, because I've been wrong so many occasions over the last 10 years. And every time I think I'm right about something, crypto comes along and turns my world upside down and shows how it's completely the opposite. So try and enjoy the ride at what I believe is the most exciting time to be alive in financial history. And also in these crisis situations, do what you need to do with coronavirus. I'm doing my, alcohol spray on my hands. I'm wearing a mask when I go up. Yesterday, when I went to the supermarket, I was the only one, and people were ridiculing me. But it's, I think you just got to look at yourself. What's more important to you? Keeping yourself safe and keeping other people safe, or being ridiculed in a supermarket. And it turns out that we were all wrong, and this is an overreaction. So take care of yourself and your loved ones. And it's an exciting time. Thanks for doing this interview. I'm sorry I hogged the show. Maybe you can do another interview, because I think you've got some really interesting content around what you're doing in the traditional financial side. And yeah, education is so important. If there is a solution, it's education. So creating content, do what you can, think how you can be of service to people, and keep doing what you're doing, because I think the more people know, the more they can make wiser decisions.
Simon, absolutely well said, sir. I've been dying to talk to you, so it's a real pleasure to have you on. I'd absolutely love to have you back to have a chat with Lawrence and I. And I saw you hold up the sanitizer, and I know I have to give Lawrence this opportunity now. Lawrence, well, I've been trying to get the rights to a certain territory for the sanitizer Lawrence has.
Well, let me finish off on this one little point, and I think you may enjoy this, Simon.
Yeah.
So this basically is a new technology in sanitation. And basically, this is why I think technology can basically solve a lot of problems. Your hand sanitizer, is it alcohol-based?
Yep.
So when you put that on, basically, it will clean anything that's on your hands that you may have picked up. And for the time that the alcohol is effective, it dries within minutes. It will protect you. But after that, whatever you touch is back on, right?
Yep.
So it's not effective and long-lasting. This is a product that I bought into Asia. It's called Gold Shield. And it's been tested by 30-odd independent studies. What it does is, when you put it on, it basically comes in a foam form. It's like basically like if you're putting on shaving cream, but it's a lot lighter. But it puts around your hands effectively what's best described using nanotechnology, effectively a minefield around your hands. It's like barbed wire at a microscopic level. It will keep you protected for 24 hours when you touch coronavirus, or if you are unfortunate enough to touch Ebola even. It's been clinically tested to kill those viruses within seconds of contact with it.
Oh God, Lawrence, I'm going to have to wrap you up here shortly. It sounds like you can go forever on this.
No, well, I'm just finishing off the description of it.
I gave the perfect segue, but yeah, I mean, and that wasn't planned, by the way.
No, that wasn't a shill, people. No, none of this is a shill, actually. So Simon is probably one of the people I respect the most in the space. He's done some amazing things, and Lawrence definitely has the best hand sanitizer in the space.
Oh, no doubt, Sean.
Awesome. Okay,
I'll put links to everyone's businesses below. And yeah, Simon, I know we've run half an hour over time, and thank you so much for your time.
Make sure you share the link and let me know.
Yeah, it's good chatting, Simon. Take care, guys.
Thank you.
See you all again soon. Cheers, guys. Bye now.
Bye-bye.